Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
But let's take a look at some of the stocks on the move today. We can do that with Bloomberg's John Tucker. John, what are you looking at today?
Well, in the shale patch, U.S. drilling, all the good sites have been taken or dried up. So, consolidate.
There you go.
Devon Energy agreeing to acquire rival share driller Coterra Energy. The price tag here at $21.4 billion. It looks like this is going to be an all-stock transaction. It's actually one of the largest oil and natural gas deals in years. So Coterra stockholders will receive 0.7 Devon shares for each share they own. The company's going to keep the Devon name, and the CEO there, Clay Gasper, he's going to be the big boss after the deal closes. We actually first reported the talks earlier this year, and the deal expected to close in the second quarter. It'll generate, the expectation at least, is it's going to generate $1 billion in pre-tax savings, a combination with strengthen their positions in the Permian Basin of West Texas and New Mexico. So they're going to be able to deal a little better with Exxon and their other rival.
Well, the first thing I do is, who's getting paid here. Evercore is serving as financial advisor. Skadden, legal advisor to Devon. So those are getting paid. Goldman Sachs, JP Morgan, representing Coterra. They're also doing a fairness opinion.
Devon's down about
Gibson
3% too.
And
no surprise to find that.
No comment so far from Billy Bob.
Landman. You watch Landman.
Sure.
I just, because of you, I just started.
Yeah, don't get me started, John.
I just started it.
There you go.
Yeah, I'm enjoying Billy Bob Thornton.
Yeah,
all right, we digress. Go ahead, John Tucker.
We move on to the world of crypto and the exchanges. The latest downturn for crypto, Bitcoin is up just a bit this morning. No spectacular scandals, no bankrupt exchange, no regulatory crackdown, yet for the biggest trading platforms. The damage is starting to look a little familiar. Bitcoin, again, down more than 35% since the October crash. For exchanges, though, like Coinbase, the hit has been a lot steeper. Trading volumes, which, of course, is the core of their business, that is plunging, dragging share prices down 40 and 55% over the past 3 months. Analysts are also slashing their expectations. Coinbase hasn't commented so far. Well, the pressure point is simple. More crypto exchanges generate the biggest chunk of their revenue from the transaction fees and the trading activity.
Also, look, new legislation's coming down the pike this year. At least you have to, or regulation, right? Coming down the pike for this industry. So it's going to be, I would think it's going to be a volatile time.
Yeah, no, absolutely. Let's move on to also one of the most active, it was in the pre-market, Oracle kicking off a U.S. dollar and bond offering. The software giant trying to raise $45 to $50 billion through a combination of debt and equity sales to build, spend more on infrastructure
AI
and
centers.
AI. They're going to raise the debt in a single issuance of bonds. This will cover half of the planned funding for the year. Doesn't expect to issue additional notes beyond that in 2026. The rest will be raised through a combination of equity-linked and commodity equity.
So I have to ask, the stock is up better than 4.5%, guys. So is this because investors feel good about the fact that they're going outside to find the money to do this?
Wrong. It says it's more because we got initially the shares were down, and then we got more clarity on exactly how this is going to be structured.
Okay, because the stock market's been punishing companies that are spending big on AI capex. So
initially you got rewarded for it. Now there's definitely some questions, but I think what the market's saying is now I got a little bit of clarity on how this whole thing's going to be financed.
I'll buy it.
All right, I'll wrap up real quick with Musk in advanced talks to combine SpaceX with XAI, so kind of consolidating the Musk empire. So his vision for artificial intelligence has grown too costly for any one of the single entities.
But I guess it makes more sense to do this with XAI than
it
Tesla.
Could also, there's some talk it could also happen with Tesla, and that's why the shares were lower.
All right, there you go. Just putting it all together. Whatever Elon wants to do, I think a lot of his investors will just follow right along with him.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.